Hello, welcome to European Open Briefing for Thursday, January the 31st. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we've got a broad-based rally across equities and in risk-sensitive currencies this morning, following the FOMC meeting yesterday, where the Fed struck a very dovish tone. So we can see most Asian indices closed higher, and we also have a strong start to the day in Europe. Overnight on Wall Street, we saw Dow Jones, S&P closing up by more than 1.5%. So the Fed has signaled a pause in interest rates. This is weighing on the US dollar. Dollar index fell to 3-week low. Dollar yen falling further this morning, down by 0.3%, slipping below the 109 level. The focus now does turn on to those trade talks, but at the moment we're seeing strong rally in commodity-linked currencies, the Aussie Kiwi and the Loonie, and the euro also benefiting strongly from the dollar pullback. It briefly touched the $1.15 level earlier, and even sterling managing to cross back above the 1.31 level against the US dollar, even though despite MPs mandating Theresa May to renegotiate the backstop, the EU is insisting that it's not up for renegotiation. Despite all that uncertainty, sterling holding fairly resilient under the circumstances. Gold prices, though, they touched 8.5 months highs, currently trading around $1,320 an ounce, and oil prices also up sharply this morning as well. So the Fed yesterday said that it will be patient in determining what future adjustments to the rates may be appropriate. And Jerome Powell in his press conference also signaled readiness to make changes to the balance sheet reduction plan. So all of that boosted markets across the globe, but weighed on the US dollar. Dollar yen hasn't really fallen as much as the dollar index, particularly the euro dollar pair weighing heavily down on the dollar index. The next focus now is on those trade talks. President Trump will be meeting the Chinese vice premier at 19:30 GMT, according to reports. We could possibly hear some remarks on how those trade talks are going later on. And tomorrow we do have the NFP report for January. And a quick look now at gold prices. We can see that they've crossed about the $1,320 level as US Treasury yields come under pressure on the back of a very dovish Fed. The euro also rising strongly, but we do have Eurozone fourth quarter GDP numbers coming up shortly at 10 GMT. So if those disappoint, we could see the euro pull back a little bit. And quick look at the commodity-linked currencies. The Aussie rallied strongly yesterday. We already had better than expected inflation numbers, and the Kiwi also doing fairly well. The Kiwi rising back about the 0.69 level. It got an additional boost after the S&P rating agency lifted New Zealand's credit outlook to positive. The Canadian dollar also doing well. It's getting a helping hand from higher oil prices. It touched a 12-week high. We've got Canadian monthly GDP and producer prices due at 13:30 GMT. Those GDP numbers possibly could disappoint, so we might see the Loonie pairing some of its recent gains over the past day. And in oil prices, WTI has come very close to breaching the $55 barrel level. We're seeing increasing signs that those OPEC cuts are starting to hurt supply, and more recently we've got the US sanctions on a big Venezuelan state-owned oil firm. So all of that is starting to have a notable impact on crude supply in the markets, and that's pressuring prices upwards. So that's it from me. Thank you very much for watching, and have a great day.